Welcome back, traders. Thanks for joining me here today. In this short video, you will learn how short-term patterns work in the market. In the last class, you learned that short-term patterns are patterns produced by a single bar of data or more. You also learned that short-term patterns provide the following functions, which are: they show signs of potential strength or weakness in the market, provision of entry signals or exit signals, helps in trade management. So how can a short pattern show signs of potential strength or weakness in the market? Remember, price does not move in a straight line. Price moves in waves. In a bullish or strong moving trend, there will come a time whereby price has to make a bearish pullback. Also, there will come a time the trend would have to continue in its previous direction of price movements. This price pullback and continuation are formed through short-term patterns. These are bars that would show or give us information about the next potential direction of price movements. Let's examine the short-term pattern in this market. Short-term patterns here are the Japanese candlestick. As we can see on this trend, there was a continuous repetition of swing lower lows and lower highs. These were patterns of a bearish trend. At this double bottom pattern here, we had the formation of a bullish pin bar. This bullish pin bar was a short-term pattern signal here. This bullish pin bar gave a strong signal that the last support here is still active to act as a potential support for price. The next bullish bar, which is the Marubozu candlestick here, gave the signal of the bullish strength to continue the upward movement of price upward. We can see the high-low swing here is a resistance for the bulls. The bulls broke this resistance level. There was a minor bearish candlestick. This small minor bearish candlestick indicated weak bearish interest. The next candlestick, which formed after the small bearish candlestick, was a bullish engulfing bar. This bullish engulfing pattern gave the signal of the bullish strength breaking out of the resistance level here. The overlapping of candlesticks here indicated the weakness of the bulls here. This was a battle zone between the bulls and bears. The bearish Marubozu candlestick here gave an indication of the bears' victory. Price later went back below the key level structure here. Surprisingly, the bulls stepped in aggressively and pulled back price, closing above the key level structure. This long bullish candlestick here indicated strong bullish strength. The next bullish candlestick gave another signal of the bulls totally taking over the trend from the previous bearish trend. We can now see how the short-term pattern revealed the strength and weaknesses of each participant in the market. Let's see how short-term patterns can also help to make an entry in the market. The bullish pin bar short-term pattern here gave an indication of where to look out for a short buy setup in this market. The strong bullish Marubozu candlestick short-term pattern here gave the signal of where to make an entry for traders who missed the entry on the bullish pin bar here, while the bullish engulfing bar here confirmed the new count of bullish wave in this market. This bullish engulfing short-term pattern is the level where the swing traders can open their long position in this market. Let's see how short-term patterns can help us to manage our trades in this market. For traders who make an entry based on the bullish pin bar short-term pattern here, they have to move their stop loss from the tail of the pin bar here to the low of the strong bullish Marubozu candlestick here. As price progresses upward, They can also trail their profit to the low of the bullish engulfing bar at this key level here. The last bullish engulfing pattern at this medium of consolidation here would have been the last trailing stop level before the short bearish move below support level here. Traders who bought the second bullish engulfing short-term pattern here would have to trail their profit to the low of the next bullish candlestick here. The next trailing level as price progresses upward would be the low of the bullish pin bar here. The next is the low of the strong bullish candlestick here. This is how to manage trades with the short-term pattern bars. Let's see an example in a bearish trend. Here's a ranging market. There was a support level at 1.27691 price level. Price broke the support level with a huge volume here. The strong bearish move of price, which led to the breakout of the support level here, gave the signal of the strength of the bears in this market. We can make a sell entry based on the bearish candlestick, which broke out of the support level here. We can place our stop loss above the last bearish Marubozu candlestick at the last swing low high here. As price moved down to the previous support level here through a long bearish candlestick, we can manage our trade by trailing our profit to the high of this same strong bearish candlestick. The next bar was a doji bar. As the next candlestick turned into another bearish bar, we can trail our profit to the high of the doji bar here. We can see the next bar was a long bearish candlestick. We can as well trail our profit to the high of this same long bearish candlestick. The next bearish candlestick failed to close below the low of the last long bearish candlestick here, and there were overlapping of candlesticks at this low here. This gave the signal of weakness in the bearish interest here. Therefore, this is a signal to close our selling position. In the next video, I will educate you on which is better between the long-term and short-term patterns. Make sure you don't miss the next video.